I said it in my last video and I'll say it again now. Unsubscribe, unfollow, and stop listening to anyone that was fear-mongering and saying concretely that the top was in back in March, April times. We just hit a new all-time high in May, and everyone in the CWM community have kind of been expecting this. We all stayed resolute and objective throughout these past months. Many of us have been accumulating strong projects at lows, buying dips on Bitcoin, Ethereum, and other altcoins because we had our thesis and took emotion out of it. The constant fundamental analysis, technical analysis, macroeconomic and political analysis is all paying dividends now. It feels good to be right, but it's going to feel even better as we approach the impending blow off top, which will be coming soon. And if you're part of this community, then you are in the perfect place. What's up guys? I hope you're doing amazingly well. Massive week in crypto as usual. Today's a market update video covering the usuals. We'll take a look at Bitcoin, the charts and the fundamentals. Then we'll take a look at the recent macroeconomic news and what our indicators are telling us. After that, some analysis on Ethereum and alt season. As always, please remember that whilst I am a financial advisor in real life, none of this is financial advice. Beginning with Bitcoin, as mentioned at the start of the video, we have indeed hit a new all-time high. So happy new all-time high week to everyone. Most definitely deserved after all the pain we were going through. Bitcoin has rebounded 50% since its low in April. Absolutely absurd numbers. A colleague at work was actually telling me how he made good returns on buying the dip in stocks, saying he made around 6 or 7%, which of course in the real world is very good. I smiled and waited for him to finish before asking him to guess what Bitcoin did in the same period. He guessed 10%, I said little more. He said 12, I said little more. He went up to about 20% before I decided to put him out of his misery and said 50%. He muttered, wow, then said something about high risk or, whatever the usual excuse is, but I digress. Solid performance. We broke the previous high of around 109k, getting to just under 112, so not a ridiculous explosion upwards, but a very good indicator of the positive momentum and sentiment we have right now, which is somewhat ironic because, as I'll touch on later in this video, crypto is still relatively quiet. We're on a pullback right now due to macroeconomics, nothing to be concerned about. It could just be a short-term blip. The way the previous weeks have gone, it wouldn't surprise me if we recovered in the next few days and pushed for new highs again. In terms of how far could we drop if it continues, if we go below 100k, I can see the mid-90s as a region to consolidate. This does not concern me at all as the cycle indicators we've been watching won't have been invalidated. We still remain comfortably above the 50-week moving average, which has stayed so strong at various points this cycle, despite a few close calls, and is overall a very useful tool in estimating when it could all be over. We also haven't dropped below to the 70s, low 70s region, which most of the news articles were calling for only a few months back. If either of these two events happen, then I would possibly be calling for the cycle to most likely be over, but as for now, we're looking good. And we recently had the golden cross, which made a lot of news. To be honest, I don't read too much into this. I guess it's good for investor sentiment and can make a lot of technical guys bullish, but if you remember the death cross that was touted a few weeks back, I called it out saying it had the opposite effect and we should expect a rally soon. Lo and behold, we did rally after that. But yeah, overall we are still looking very good for Bitcoin. Barring any further geopolitical changes, I do expect this rally to continue. However, I am not opposed to a consolidation period, either in this 100 to 107k range or in the 90s region. The longer we consolidate and move sideways here, the more explosive the move up will be. Quick break to ask, why are you not part of the best free community in crypto? Join over 1,000 people determined to make money and help each other out. Sign up to the email newsletter too. It's all free. You've got no excuse. Link down below. As for noteworthy news articles, we had Coinbase join the S&P 500. This is very big and groundbreaking for this industry. The S&P is arguably the world's most elite stock exchange, so to have a crypto firm join and rub shoulders with the 500 largest companies in America is a very good look for crypto, and indicates that we'll start to see more and more of this in the future. Further news coming out regarding Bitcoin reserves. A couple more US states are joining in the party, with Texas close to full approval, as well as more and more companies adding Bitcoin to their holdings. Little by little, we will get more news like this, more adoption. In other words, game theory is playing out. The ETF inflows for Bitcoin have continued to look good also. We said the strength the ETF showed in recent months was exceptional. I would have expected far more outflows in the tariff drama, but they stayed resolute, and we're back to seeing close to $1 billion days, the largest actually since January. And you guys know I love this chart. It's very speculative and it's very hypothetical, but I just find it so intriguing. It compares Bitcoin cycle tops, and we are currently comparing this cycle to the 2017 top. Many people, myself included, were saying we could have a 2021 double top scenario this year, but instead, after more analysis, we seem to be following 2017 very closely. If this continues, we could have steady increases over the next few months before the blow off top and alt season occurs in Q4, maybe November, December time. I am absolutely not opposed to this at all, but remember, we could deviate and do our own thing, hence why taking profits along the way this year will be key. So why is Bitcoin pulling back slightly? It was all going so well, then our boy Donald decides to cause a little bit of anarchy. The markets are reacting in response to Trump's 50% tariff threat on the EU. This happened on Friday, I believe, so the Monday Open will be very interesting. But is this just another empty threat to get the EU to play ball? Perhaps that's why Bitcoin only retraced a small amount. I don't want to jinx it before we tumble down 10% or something in the next few days, but I don't know. We saw what happened with the other tariffs, open to negotiation, and I'm sure many will be reduced significantly. I said the only country I can see an actual tariff war with would be China, and apparently even they are in trade talks with the US. Trump's cabinet have spoken kind of negatively of the EU though, and relations don't seem to be great, but again, I don't know. I feel, or at least hope, this will be a false flag, but it's early days, so let's wait and see. Inflation has been spiking up recently, which isn't great, but it is still below the recent data release of 2.3%, and as a result, the markets are still pricing in multiple rate cuts this year. But Trump may have screwed us again here. We know he was going head to head with the Fed, as far as threatening to fire Jerome Powell. We know he wants a weak dollar to reduce the trade deficit and encourage domestic growth, so he's been wanting lower rates. But the way he's gone about it has kind of turned it into a power play between himself and the Fed. I think they don't want to be seen as giving in to the president's demands. So before, whilst a rate cut looked almost certain in June, now it's looking unlikely. What isn't helping, ironically, is the positive economic data. Inflation cooling, labour markets remaining steady. The Fed clearly see this as their QT strategy working and are operating on a if it ain't broke, don't fix it tactic. Takes me back to April where we questioned whether the markets recovered too quickly. If Trump waited just a little while longer, let the markets bleed more, the Fed would have been forced to step in, switch the QT strategy off, or even pivot to QE. Then we'd have the conditions we need to really blow. But alas, that didn't happen. Either way, the sooner these rate cuts occur, the better. Global liquidity has been such a strong indicator for us this cycle and continues to look good. We have now hit new highs this year, which is what we want to see. To keep it short, more liquidity around the world means more liquidity available to pump the markets. Remember, Bitcoin follows this indicator with a perceived lag, be it 75, 85, 100 days or whatever, depending on which indicator you use and the metrics. We can see the metrics used in this indicator here, various M2s and various balance sheets, but let me quickly offset this indicator by 75 days. And there we go. We can now see just how closely this aligns with Bitcoin, which is kind of crazy. We can see that going off of this data, there's still plenty of room for Bitcoin to rise. Also playing in our favor is the dollar dropping drastically in the past week. It's falling down from our initial risk on region and looks as though, especially with global liquidity rising and potential cuts, this could continue falling down. The further the better, to be honest. I'm not sure how low we could go, but we need the dollar to be as unfavorable to investors as possible and really ignite the appeal of risk assets like stocks and crypto. Moving on to Ethereum, it has continued to show some strength this week. We seem to be stuck around this 2,500 mark, which we did say was a strong possibility due to the heavy resistance in this area. I'm pretty happy with ETH being here for the time being. It's allowed the alts to pump a little bit too and consolidate higher. But the key will be getting above 3k. I honestly think above 3k will be clear skies, so to speak, and we could then rally hard upwards towards 4k and, God willing, finally break all-time highs. One thing to note though, if Bitcoin corrects, of course, ETH will do the same. I don't think it will be as harsh a correction as before due to the recent ETH BTC strength, but let's see. Definitely seeing some positive signs. We all know ETH BTC is the unofficial indicator for alt season. We're going nowhere until this sparks into life and starts giving us huge green candles. We've got a little tease of it here, but we're going to need much more in the future. In more positive news for the chain, we are getting increased transactions and the transaction fees are also surging due to the increased demand. This is what we need. I know it's funny to shit on ETH with how poorly it's performed this cycle. I do it too, but it's still the utility chain. It's still the most institutionally respected chain, and it really isn't going to go anywhere. Just like Bitcoin, it's nice to see green in the recent inflows for Ethereum, but we still got some way to go. Looking back at December, the inflows were massive, so we'll hopefully be replicating this in the months to come, but again, baby steps. So what about alt season? First of all, I may need to coin a new term because I'm not sure whether this alt season will be like previous ones. Will every single coin pump ridiculously and we all ride off into the sunset in our Ferrari F12s? Most likely not. I'd love to be proven wrong, but I can't see it happening. What I can see is sector-specific alt seasons where the coins in a certain narrative pump, but even then, it won't be all of them. I think individual coins will be like the past and pull the 10, 20, 50x multiples in a very short period of time, but it'll be like survival of the fittest. Just like ETH BTC, we ain't going anywhere with Bitcoin dominance this high. It needs to drop and it needs to drop fast. Ideally, whilst the price of Bitcoin is still rising. Rising Bitcoin price with falling Bitcoin dominance would be like a nuclear explosion in our altcoins. We were at similar levels back in 2021 before we got this monumental fall off. Fingers crossed it happens again. Whether it's likely with the Bitcoin ETFs, nation states, MicroStrategy, etc., I'm not sure, but it just illustrates how quickly things can change here. Also in this metric too, stablecoin dominance, currently at 6.44%. I have combined the charts of USDT and USDC here, but again, this is an indicator showing investors are switching from the safety of stablecoins and their yield or whatever, and rotating into other assets, be it Bitcoin, Ethereum, or all the other alts. We can see that in 2024, the 2 times that it was at its lowest was the 2 times the market was looking pretty good for us. Ideally, we want to drop even lower than 5%. The 4 to 5% region would be nice, but if we really want to cook on gas, then the 3 to 4% region, just like back in 2021, would be incredible. It has been nice to see the drop off from April, but for the explosive alt season that we desire, plenty of work still needs to be done. Although how accurate this will be as a representation of alt season may also change as more and more stablecoin legislations are passed, encouraging the big players to begin holding. This brings me on to my next point. What we had last year were not alt seasons. I'd call them baby alt seasons or just foreplay. It was looking like we'd get there, but it wasn't sustainable, it wasn't explosive, and it didn't last long. I'm talking about the March, April, and November, December periods. Yes, we saw nice return on alts, but in all honesty, we were let down, mainly by Ethereum. I don't think we can have a true alt season until Ethereum breaks new highs and sentiment is brought to the altcoins properly. Right now, there'll be many investors wondering what the motive is to swap their Bitcoin for Ethereum, and ETH really hasn't made a strong enough argument so far. More data which I found interesting, retail really hasn't been here this cycle. Benjamin Cohen's social media risk illustrates what I've been feeling perfectly. We are currently at 0 in 2025, and it really has felt like a ghost town here. You can tell by YouTube views, Twitter, Discord servers. In early 2024, even a small channel like mine at the time was getting guaranteed thousands of views. Discord servers were popping off every second, and now look around. YouTube views are so low, Discords are quiet, so this says to me, we still have so much higher to go. If we're at 0 right now, and Bitcoin just broke its all-time high, Coinbase made it into the S&P 500, what will happen as this metric increases? Even at the 2 peaks last year, it only got just above 0.4. In an ideal world, we would target the 2021 tops, 0.9 and 1, but even if we get above 0.5 and so on, I think our portfolios are going to be looking so juicy. But yeah, all in all, we got plenty of room to grow, from price perspectives to retail perspectives. A lot has to go right, of course, and anything could happen to send us tumbling down again, but we got to play the odds of being invested in this market as opposed to not being invested. It's a calculated bet, and the upside potential significantly outweighs the downside potential, for me anyway. As for when this happens, I have multiple theories which may warrant another video. We could have the pump coming in the summer, it could arrive in Q4 this year like 2017, or it could even be delayed until 2026. I know that's not the most helpful insight, but I gotta cover all bases, and it's an ongoing dynamic hypothesis. I'll be bringing more and more altcoins and analysis to this channel, so please subscribe if you'd be interested. I genuinely think this community will become the best on YouTube and in Discord for bringing gems, so go ahead and join. It's completely free. Thanks for watching. I really appreciate all the support, guys, and I'll catch you all in the next one. Take care.